Okay. I think we are good to go now. Hello.
Yes.
Uh-huh.
Hi.
Yes,
Okay.
madam.
Okay, today we are going to look at financial
Hi.
management. We are looking at financial management, and the section is so broad. The section aims at helping you to recognize the need for effective use of financial resources to achieve family goals, and also apply management principles to achieve financial goals. It will also help you to appreciate the importance of planning for the future. Now, the section overview. There are resources individuals and families can explore for their benefit. However, identifying these resources and making use of them effectively present challenges. Now, individuals and families sometimes lack the competency for meeting these challenges, although they are very essential in determining the quality of life ahead. And as such, people need information that will make them competent in managing their available financial resources. So this section will discuss income, credit, and then planning for future financial security. So for today, we are going to look at planning the use of income and the objectives of the section we have just looked at. When we are done with this topic, or by the end of this unit, you should be able to explain the concept of income and then the types of income, and also analyze factors that determine levels of family income, and be able to identify factors that influence money management in the family, and explain the resources for making a spending plan, and also explain the steps for making a budget and using it. And we should also be able to explain how to make a budget work. So that is our objective for this. So income. What at all is income? Yes, income. Any idea from a cons? Michael, I can see you want to talk.
Madam,
Yes.
madam, income,
Hmm.
it's this one. It's what we earn, or the money we earn from taking part in economic activities.
Okay, that is your idea. Income, we will say, is the flow of wealth or economic goods and services. The flow of wealth or economic goods and services. And this comprises all monies, goods, and services that are available to individuals and families for use in satisfying their needs within a given period. So income is not only restricted to cash. No, there are other assets that you can classify or you can call income. So we are saying that income is the flow of wealth or the flow of economic goods and services, and it comprises monies, that's the physical cash, goods and services that are available to individuals and families to use to satisfy their needs within a given period. Is that clear? Hello, Ruth.
Yes.
Okay, so we can continue. Now, classification of individual and family income. We can classify income under money income and then non-money income. Money income and non-money income. When we talk about money income, of course, that's what Michael used in his example. Money income has to do with the physical cash, and we earn this through salaries and wages, then profit on sales, interest on savings, and allowances. These are what we call money income. And then the non-money income too, we have two categories. We have the productive income and then the hidden income. The productive income is also in two categories. We have the household production income and then service income. Productive income, we are saying, is also in two categories: household production income and service income. And then we have a second category of non-money income, which is hidden income. And when we talk about hidden income, some of the categories under hidden income is community income, fringe benefits, customer savings income, and then psychic income. So we'll be looking at this one by one, and we'll start from the non-money income. Like we just discussed, there are two major sources of non-money income, namely productive income and then hidden income. Now, what is productive income? When we talk about productive income, it comprises the value of the goods and services family members render to the family and the durable goods they have. Hence, there are two main sources of this productive income, which is the household income and then the service income. So with this productive income, it is not physical cash, but the value of our goods and services. And that is also in two folds. We have the household income and then the service income. So we'll look at the household income, which falls under productive income. The household income refers to the value of goods and services which are produced within the sphere of the household only for the use of the family or for one's self. So each time you use your own energy, you use your talent, your knowledge to produce something, you are using household income. For instance, when you prepare your own meals, you have used household income. Instead of you paying money for somebody to prepare it for you, you prepared it yourself. So that is an example of household income. And then if you make a garden at the back of your home, so you need okra, you just enter your garden, you get your okra, you get your garden eggs, your pepper, everything from your garden eggs, instead of you using money to buy it. So that money which you could have used in buying your okra or your pepper or your garden eggs, you can use it for another thing. So we call this household production income. Another example, if you know how to sew and then you sew your own dress or you sew for a family member, instead of paying somebody else to do that, you have used household production income. Is that clear?
Yes.
Hello? Okay. Okay, so the money that you save through household production can be used to meet other demands in the family. The next one is service income. The service income too is the value of the use of durable goods you own or your property, such as house, equipment, furniture. So for instance, if you have your own home or your own house, you don't need to rent and pay for it. So that becomes a service income. And this falls under productive income. Again, you have an equipment at home which you use to satisfy needs of family members so that you don't need to go out for somebody to render that service, then you pay. That one too is a form of service income. For instance, you have your own motorbike. When you are going to town, you sit on it, you go, or your car, you sit on it and then you go. These are services that are rendered by the items you have. So are you clear with the productive income?
Yes.
Ruth, what about you?
Madam, the network was good,
Yes.
so I didn't get you.
We are still on non-money income, and we said that one category of non-money income is productive income. We said under the productive income, we have the household productive income. With the household productive income, that refers to things that you use your talent, your knowledge, your skills to do. And we gave an example that if you can prepare your own meals, you are not going to hire somebody to cook for you so that you pay the person. That becomes a household productive income. And also, if you are able to make a backyard garden, you have your pepper in the garden, your okra, name them, whatever you choose to do there. Instead of you using money to buy those items, you just walk to your garden and you get them. Or if you are able to sew dress for yourself or for a family member, that money you have to pay somebody in doing it will not be paid, but the money will be used for something else. Then we look at the second category of the productive income, which is service income. And we said that that refers to the value of the use of durable goods you own. And we gave example that if you have your own house, you don't need to go and rent so that you pay rent. It is your own house and you are enjoying the services there. So it is a service income. Or you have your own car. So when you are going to town, all you do is just join your car, fuel it, you go. You don't need to pay somebody for driving you because you are driving the car yourself. Is that clear now? Can we continue?
Yes, ma'am.
Okay. The second category,
Yes.
the non-money income, is hidden income. Now, when we talk of hidden income, it's an income, it's something that you cannot really see it as money coming to you directly, but you enjoy it. An example is community income. Community income. So the community income refers to all the community facilities that the individual or family members use. And with this, we can talk about schools, markets, hospitals, post office, libraries. Can you add more? Banks. Because they are community. Sorry?
Hospitals.
Hospitals, okay. They are community because these facilities are for all the people in a community. Now, you cannot say that this school is only for a pedo family, so nobody should attend it. No. That is the reason why it's a community income. You are all enjoying it. Markets. The market is in the community. So if you need to buy something, you just go to the community and you can easily get it. You don't need to travel so far. So it becomes an income you enjoy in disguise, but it is a non-money income. So is that one clear, the community income?
Yes.
Or you have a question on that? The next one is fringe benefits or employment benefit income. Fringe benefit or employment benefit income. Now, this also refers to the benefit an employee enjoys from his or her employment. There are some facilities or there are some institutions that when you are working there, you enjoy some benefits. Let's just cite an example using Sonrise. All the staff living on campus, we are enjoying accommodation facility. That is an example of a fringe benefit. Now, let's assume our clinic is active and is being operated, and then one of the enjoyments that is given is that all staff and their spouses and children, anytime you fall sick, you can access the clinic for free. That is also an example of fringe benefits. Can you add one each? Fringe benefits, looking at the examples I have cited. Yes, Ruth, you want to talk? Hello.
Oh.
Yes.
Hi.
So we are listening to your example. Or Michael should come first.
Madam.
Yes.
Hey, madam, that is on the president.
Yes.
The president.
Let me give another example and let's see if you can come back. Maybe that will remind you. You see, there are some workplaces too that there's a bus that is moving so that wherever you live, you have a point where you can join the bus free of charge to your workplace. That is also an example of a fringe benefit. Ruth, are you ready now with your answer? Michael, what about
Madam,
you?
I have one.
Okay. Go ahead and talk.
Madam, some hotels saying when you pay for like 1 week, for like you are staying for 1 week, you have the benefit.
Madam, I can't hear you well.
Okay, hello. Can you hear me now? Ruth, can you hear us now?
Yes.
Okay, Michael, go ahead.
Madam, so some hotels, when you pay to like stay for 1 week, you have the benefits for enjoying free breakfast for that 1 week.
That is for the clients, but we are talking about employment benefits where you work. See the examples I cited, that's staff living on campus. We don't pay accommodation. That is an example of a fringe benefit. And then I also gave another example that staff bus that commutes workers from their homes to or from a point to the workplace. So this has to do with what an employee enjoys aside the salary and then the wage. Do you get it? Ruth.
Ah, yes, madam.
Ruth, what about you? Do you understand it? Hello? Do you understand that, so that we move on to the next one? Hello?
Madam.
Ruth, do you understand the fringe benefits now?
Madam, not really.
What I'm saying is this. Your mother works at, let's assume your mother works at Leprosarium. She's a nurse there. And let's assume there's a rule there that once you are working there, if you or your children are sick, they have access to free health care because she is working there. That is a fringe benefit I'm talking about. Do you understand it now? Sorry?
So can you say that those working in the district, like district assembly, can you say that they are enjoying the benefits of free accommodation?
That is if they have been provided with free accommodation.
Like
yes.
the district executive.
Yes, it's a fringe benefit. It's a fringe benefit for them. So can we continue now? Or you want another example?
Yes.
Okay.
No.
Madam, in some very well, when they employ mates, like some of the mates are given a free accommodation.
Yes, that shows you understand it. Or even some workplaces, they give them lunch free, you don't pay. Like Sonrise, for instance, staff is giving breakfast and lunch for free. So that's an example of a fringe benefit. Now, the next example of hidden income is psychic income. Psychic income. When we talk about psychic, it has to do with the mind or feeling, the mind. So it refers to the feeling of satisfaction obtained from the ownership or utilization of goods and services. Now, with the psychic income, it's not something you can really measure, but it comes as a result of you feeling satisfied for how you use your finance. For instance, as your parents are investing in you right now, one day they will say, wow, my son, I didn't invest in vain. He has his own hotel. He has employed people. Wow, my daughter. This is, so that kind of satisfaction gained from what you used your income for is a psychic income. Another person will also say, okay, I want to invest into, say, farming. So after the money is being used and then the person sees the outcome of it, how satisfied the person is, that is what is referred to as the psychic income. So with the psychic income, you can't really measure it. It varies from one person to another. Is that clear?
Yes.
Okay. So with the hidden income, we spoke about community income, fringe benefits, and then psychic income. I hope you can remember under non-money income.
Yes.
Yeah.
Okay, so the next one now is money income. Money income. Now we are going to talk about the physical cash, money income. Money, when we talk of money, is anything which people readily accept as payment for goods, services, and debt, payment of debt. So money is anything which people readily accept as payment of goods, services, and debt. And it is a legal tender because it must be issued under the authority of the state. And all bank notes used in every country must carry the notes. If you have any bank note at all, money, bank notes, if you look beneath it, the written is very small. And this note is legal, this note is issued on statutory authority, is legal tender, and it must be accepted for payment of any amount. Any bank note at all you take, that is written there very small. Now, in the olden days, you know, it was the barter trading. And the barter trading has to do with exchange of goods for goods. And the barter trading couldn't continue because it was difficult determining the value. Maybe you are giving out a marker. What do you exchange in return? What will be exchanged with the marker so that you feel that, okay, the marker I am giving out worth what I am receiving? So that is how come the barter trading was taken off, and now we are using money. We are using money, and the money, we use both the coins and then the notes. Now let's look at some characteristics of money. Nature of money. Money must be acceptable. People must be willing to accept it in payment for goods and services and debt. Remember when the currency was changed, there was this 1 peswa note, a 1 peswa coin. Now it's out of the system. The 1 peswa coin is out of the system because a lot of people didn't like it. You use a lot. But money is something that must be accepted. You cannot say that I don't like the 50 cedi note, I don't like the 100 cedis note. No. Once it is on authority, it's legal tender, it must be accepted by everybody that it is given to. Another characteristic of money is that it must be durable. When we say something is durable, it means that the thing should be valuable. So anything which is used as money must not change its form and value for a long period of time. So you realize that when currencies are printed, it takes a prolonged period of time before another one or before there will be a change. You cannot just say that 50 cedis note is printed, then a year or two later they are changing it. No, it must be in the system for some time. Then we say that the money is durable. Another characteristic is that it must be divisible. When we say money must be divisible, what it means is that you should have it in denominations as we have 1 cedi, 2 cedis, 5 cedis, 10 cedis, 20, and then 10. So that when you use a larger denomination to buy, they are able to give you a change. That is the divisibility of money. Yes.
Madam, please. Madam, please.
Just a minute.
Okay.
The recording. Okay, Michael, you were asking a question.
Hey, madam, 5 pesos cannot be divisible. So is it not money?
It is money. You see, we used to have the 1 peso, but those denominations normally you realize if you buy from some of these shops, you will see a change of something with something pesos. Do they give you that? They don't, but on their records, but multiples of that, we say little drops of water makes a mighty ocean. So multiples of that multiples of that amount can amount to something. Ruth, do you have a question or we should continue?
Well, please, you should continue.
Okay. Another characteristic is that it must be portable. When we talk about portability of money, it means that money must be easy to carry from place to place to make payments. So everywhere you are going, the money shouldn't be so bulky. It should be something that you can easily carry along. That is the portability of money. That is the reason why these days we even have the larger denomination, so that if you need to carry 10,000 Ghana cedis somewhere and you are giving the 200 cedis notes, it becomes less bulky. I hope that is clear. Again, it should be scarce.
Yes.
Yes, madam.
Money should be scarce. When we say money should be scarce, what it means is that money used in any country must not be too much, else it will lose its value and cannot buy goods and services. Assuming money is something that is not scarce, you see how trees are so common. Everywhere you walk, there's money. Will you even worry yourself coming to school to learn? No, you will not. That is the reason why money must be scarce, so that we all struggle for it, we work for it. I hope that point is clear.
Madam, please, your line was breaking, so we didn't hear anything.
So we didn't hear you.
Okay, I'm saying that money should be scarce. Money should be scarce. And what this means is that money used in any country must not be too much, else it will lose its value and cannot buy goods and services. And then I was giving an example that if money is so common, I mean, you don't suffer before you get it, will you worry yourself and say you are coming to school to learn and become a great person? Because all this thing we are doing is about money and the future. So if money is not scarce, we'll not struggle. So money must be scarce so that it shouldn't lose its value. Michael, do you have a question? Okay. It should be yes.
Madam, we can hear you.
Still
Madam, please, the network is bad at your side, though.
Oh. So still about the scarcity of money. Hello.
Madam.
Hey. For instance, money being used in the Volta region shouldn't be different from what Eastern region is using or any other region in Ghana. That's the homogeneity of money. Money must be homogeneous. And then it should be officially recognized. Money should be recognized by all people as a medium of exchange. So when money is recognized, You can be able to detect counterfeit money or fake money. When we pick our money, we have some features that tells us that this money is not fake or is not a counterfeit money. So that is that about the characteristics of money. We know wages are received either daily or at the end of the week, and then salaries are what we receive at the end of the month. And it can also be money received from sales of farm produce. You have a farm, after harvesting, you sell your farm produce, the money you receive from it is physical cash, that is money or cash income. Or the interest you have earned is also physical cash. But we have ways of identifying this. One is called the earned income. And when we talk about earned income, it's actually the monies that we receive from the work we do. Now, profit you receive on goods you sold, money you receive, which is the wage or salary, they are all referred to as earned income. You've earned it, you worked for it. And then the second type is what is called the unearned income. You are just there and then somebody came and gave you 50 Ghana cedis. You didn't do any work. That is unearned income. Or you rented a house. The house probably is not even for you. Your grandfather's house, you rented it. The rent you receive, it is physical cash, but you didn't work for it. So it is unearned income. You didn't work for it. But those that you worked for is what is referred to as the earned income. And then the earned income is what you did not work for, like gifts, interest that is paid on your investment. You did not actually work for it. It is the money you invested that have accrued some interest. So it is referred to as unearned income. Now, these incomes we are talking about, some may be regular, some may also be irregular. When we talk about regular income, they are incomes that are regular and then they are frequent in amounts and then the frequency at which you receive them. For instance, a wage or salary, you know that within this year from January, if you are earning 1,000 Ghana cedis at the end of the month, that is how much you will receive. But when it comes to irregular income, those ones are not fixed. And then the frequency too varies. So the regular income can be monies you receive as interest on your investments, or profits. You are selling, the profit will vary. You have a farm. If you get more customers and you are able to sell, you make a different profit. At another time, the profit may be different. So that is not regular. So we refer to that as irregular income. So that is about regular income and then irregular income and then earned income and unearned income. The next is gross income and net income. When we talk about gross income, it's the total amount of money that a person receives from his or her earnings. Now, the net income is the income that remains after all deductions such as Social Security Fund, income tax, welfare, etc. are deducted. So with the gross income, it's all the money that you are supposed to receive, but no deductions at all. But with the net income, once your income tax is taken, your social security is also taken. Now we call it the tier 2. all that is taken, what will be left is the net income. So the net income is actually the money that is left for you to use in your budgeting. Do you understand the net and then the gross income? Hello? Net and gross income.
Yes.
Okay. Now, there are some factors that determine the level of income. We are coming to look at that. We all don't have the same level of income. And what accounts for this is what we are coming to look for. The first one is the level of education, training, or skills. The first one is the level of income, the level of education, training, or skills. Now, a trained person is usually paid more than a person with little or no skills. I think this one is quite clear. Somebody who have received training on a particular job will definitely receive more than somebody without any training in the same setting. Then the next one is types of work. The type of work that an individual does, which may require more specialized skills, or the job may be considered very important in the society. So you see that people who engage in such jobs may be paid more than people who are in other occupations. So there are certain jobs that, with the nature of the job involving more risk, definitely the earnings will be more than somebody whose job doesn't involve much risk. And can we give 2 examples to compare? Yes, jobs that you can say this job will fetch more than the other. Ruth. Hello, Ruth. Ruth, can you hear us?
Yes, madam.
Can you give an example of a job that is more specialized? Just give 2 jobs and then we compare. Yes, Michael.
Hello.
Madam, a trader and this one, and a manual worker.
Yes.
So who earns more?
The manual worker.
But
No, madam, I don't know.
It all depends on what actually goes into the manual work, what type of manual work, and then the trader, what type of trade.
I'm a nurse.
Sorry. Okay, so let's compare a nurse to somebody who is digging trench. Somebody who is digging trench. Yes. Somebody.
No, madam, the trader can earn more than the manual worker.
That's why I'm saying it will depend on the type of trade that a person is engaged in. There are some traders that earn more. Even with the trades, you can compare different categories. Do you get me? So let's say somebody selling oranges and then a nurse. Definitely, the nurse is more skilled, so will earn more than the person who is just carrying oranges and then hawking with it. I hope that is clear. Then the location or where you live. Now, the opportunities to increase your income will differ according to where you live. Example, people living in the cities will have a wider choice of job opportunities and they can make additional monies than those living in the rural areas. If somebody lives in the rural area and the person is a peasant farmer, just small scale farming, and then somebody who lives in the city, there are a lot of nurses who have shops that days that they are off duty, they go and then work in their own shops. So because they are in the cities, they have more avenues to earn additional income. And then the national income. When we talk about national income, that has to do with the government of the nation. It determines the basic salaries and then wages of workers. So there's a basic salary that every worker is supposed to get. I think it used to be 50 cedis a day, but I don't know if it's still the same. 50 cedis a day, that's a basic salary. So, basic wage per day. Then the number of people who work in the family, in a family situation, if there are 5 people working in the family, it will increase the level of income. But if the number working in the family is just 2, then there will be pressure on the little income that they get. And then status. As for the status, a person's position in the society can also determine the person's income. You have your own work, but maybe you are the assembly man or something that can add a little more to your income. So that is about the factors that determines the level of income. Now, management of income. When we talk about money management, it's an organized process of allocating or using money to achieve a specific goal or goals. I'm going over it again. Money management is an organized process of allocating or using money to achieve a specific goal or goals. So how you are able to organize your money well so that you can achieve your goal or goals, we refer to that process as money management. Now, these goals will represent your needs, whether your income is high or low, regular or irregular. You must learn to manage it well so as to obtain the maximum satisfaction or benefit from it. So no matter how low or high your income is, being it regular or irregular, you as an individual or a family should be able to manage it very well so that you can be able to achieve your goals. Any question on that?
No.
Okay. The next one is factors that influence money management. For this, I'll throw it back to you. What are some of the factors that will influence management of money?
Madam, the amount of money earned.
Okay, so that is the income level. The money that you earn as an individual or as a family. Ruth is gone. We can also talk about family needs. Family needs. The needs of the family can also influence money management. Then family size, the size of the family, how large or how small the family is, also have a role to play on money management. And then planning the use of the money. What you plan to use your money for can also have influence on how you manage the money. Okay. So now let's continue and look at spending plan or budget. We all use this word. I have budgeted, though. I've made my budget. I don't want any distraction. What is a budget? A budget is simply a spending plan for a period of time, or it is a plan for future expenditure of a given household within a period of time. I'm going over it again. Spending plan or budget. It's a plan for future expenditure of a given household for a period of time. That is about a spending plan. Now, why do we make a spending plan, or why do we make a budget? Ruth. Michael.
In order to keep money for the future.
Okay, Michael, why would you budget? Hello, Michael.
Madam, to control the expenditure of money.
To control, okay. We can also say that we make a spending plan or budget to eliminate wasteful spending. You eliminate wasteful spending. And also it will help you to decide on priorities, as well as have a better understanding of your financial status, which enable them to live within their means. When you make a budget and you realize that, no, my money cannot cater for all this, then you look at your priorities, scale of preference, those things that must wait, and then those things that must be attended to immediately. So when you make a budget, it helps you to take care of only the important needs. And then you can also achieve long-term goals through regular savings when you make a budget. And budget can also help you achieve harmony in the home. You want to add any more reason why we should make a spending plan? Okay, then let's look at steps. Steps for making a budget. First of all, if you want to make a budget, you have to list all the goals that you have. You list them. Now, and the goals should be based on your values. Values are the things we cherish in life. So as you are listing your goals, it should be based on your values.